everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. The former president of Chartered Institute of Stockbrokers, Olatunde Amolegbe, is joining me virtually. Mr. Amolegbe, good morning and welcome to the program.
Good morning, Nancy.
How are you doing, sir?
It's a pleasure to be here.
Yes, fantastic. Let's get straight to it. During my intro, I did talk about Nigerians being more invested in crypto and gambling. Why is it that Nigerians trust crypto and gambling more than investing in the capital market? What is this hula baloo about?
Well, I wouldn't say it's about Nigerians trusting one asset class over another. I think the matter is probably a little bit more complex, and probably has to do with the Nigerian situation, our demographics, our demography as well. And I will explain it this way. For traditional assets, stocks, bonds, commodities, typically will have what you refer to as a relatively high entry barrier. All right? Mm-hmm. So to buy stock now, you probably need maybe 10,000 naira or there. All right? And then there are all these charges and all of that people have to pay. If you look at what is happening in Nigeria, what has traditionally happened in Nigeria is that the bulk of our people are at the level where you will say they are below the poverty line. Most of them do not have the capacity to actually scale this entry barrier to the traditional asset classes. This is where the likes of gambling and the likes of crypto comes in. The entry barrier is very low in terms of the amount they need to stake. All right. So for argument's sake, you want to gamble, you're probably able to gamble with 1,000 naira or 2,000 naira, which means that your ordinary bus driver or conductor can participate in that.
Yeah,
right?
but
and that also
Mr. Amolegbe,
that probably also applies to even crypto.
I do understand what you're trying to say, and the market is working judiciously now to even get, some of those processes smoother. Perhaps getting it into T+0 now, as it were. Yeah. But even at that, there are stocks that do sell for 20 naira, 10 naira, 50, 100 naira in the market. With what we are seeing now, because you're trying to make me understand that it is the demography. You can also turn that demography around to be able to invest in your capital market that will make your capital market more robust. How can the market, how can the market win back this set of people? Because I really do not also want to agree with you on that, your first remark, because the data also shows it. You understand what I mean? If $50 billion is being invested in crypto in this country, aside from betting monies, that means there's money. There's investment, money.
So let me separate, at this point, let me separate gambling from crypto. The point I've made applies directly to what is happening in gambling. Easy access, low barrier to entry, low, participation levels. Crypto is a different matter entirely. Don't forget.
Yes, I do.
The basic advent of crypto was for it to be a currency of exchange, a means of exchange, just like a cash, like a checkbook. All right. It only transited into being an asset class, if you will, because people found out that it was simply too volatile for it to be a veritable means of exchange. So it is now an asset class. Now, one of the major problems that we've had from the transition of people from crypto to traditional assets is because, there just doesn't seems to be that basic social agreement around what crypto is, the value underpinning crypto. So if you buy stocks in Unilever, for instance, you know that okay, the factory is there, they are producing Omo. At the end of the day, they make profit. They give you a dividend if possible. Uh, that underlying value, all right, it does not translate to crypto. So what you are now seeing gradually with this 50 billion, figure we have heard, is that social agreement that there is value, all right, in crypto, is basically being forced on everybody to reckon with.
Okay,
Because if some people do not believe that there is value in crypto, they certainly wouldn't have staked 50 billion on doing transaction in crypto.
okay, Mr.
What it
Amolegbe,
means is that it will have, okay, what it means, if you
yes,
don't mind,
yes.
is that it will now ultimately force both the participants, the operators, and the regulators to look at that asset class and reconsider their stance regarding it, because typically the stance is to try and either avoid it or even trying to ban it. But
Okay.
if people are still participating to the level that they are participating it, we need to take a look at our attitude towards that asset class.
Now, don't you think that with a country that has low financial literacy, but yet
Yes.
being so comfortable with a high risk asset, you understand what I mean? Isn't there that kind of disparity? That is one. The second question I'll be asking is, don't you also see this as a symptom of youth disillusionment to the old order? Yes, to the old order of the traditional market stuff that we're having, to the old economic order, and they are looking for more ways of, getting returns faster. That is one. I'm trying to juggle everything in. Then three, what can market operators such as you, when I mean you and your colleagues within that space, do to be able to generate interest? Because if only 4% is invested in that market, that means that the market is still open and there's still room for improvement. What can you, as operators, and what do you expect from the regulators to do? I've had Dr. Agama, Emomotimi Agama, here on the show a few times, and I've also posed that question to him as the SEC DG, in the sense that perhaps the people you are regulating or you are supposed to regulating are moving faster than you. So as a regulator, you need also to move even faster than the operators. So, Mr. Amolegbe, over to you.
Okay, so you know that traditionally the youths, by nature, are always early adopters of innovation and technology. That's the way that's always been. All right, so it's no surprise that they are able to adopt assets such as cryptos, earlier than maybe the older investors. But having said that, you must also recognize some of the innate features of crypto. I've mentioned low barrier to entry. The fact that you can enter at very limited amount of money. All right, those are features that characterizes youth. All right. The fact that these asset classes can also be transferred, they're easily transferable, morning, noon, and night. There's no time that you cannot trade on the crypto market, and so those are the issues or the barriers that are presently, I would say, entering the traditional market. So the traditional market, trading period is limited, uh, entry barrier is high. The cost of even of executing transactions is high, at least compared to crypto. And we have seen, as you have mentioned, that the risk appetite is there, because everybody knows that crypto assets are relatively risky compared to even traditional assets. But if people are still willing to stake their money on that risky asset, it means that there are some basic structural issues which we need to learn from those asset classes and apply to the traditional asset classes in order to encourage the people that are participating in that market to want to migrate to the traditional market. So we're saying, the entry level has to be lower than it is at the moment. The cost of transaction has to be lower at the moment. The period of trading, the time frame within which the transferability of the asset, if you will, across space and time has to also improve. So because if someone can wake up at 2 a.m. and still go ahead and trade on the crypto exchange, but you have to wait between 9 o'clock and 2 o'clock to trade on the traditional asset classes.
Okay.
Those are part of the things that our youths have a problem with. So we need to adjust our structure in order for them to find the traditional assets.
Oh, okay. It seems Mr. Amolegbe is gone there, because the question I wanted to ask Mr. Amolegbe as we close is, what can the capital market actually glean? I don't know if he's back. What can the capital market glean, perhaps from betting, as it were, in terms of what can they learn from perhaps the sport betting people that can be adopted in the capital market that might not be risky? But anyway, I will continue that conversation, because this is such an important conversation that 4% of Nigerians invest in the capital market, yet you're seeing 60 million Nigerians involved in betting. What do we do about that? Okay, all right. So I think at this point we'll close. Thank you very much, Mr. Olatunde Amolegbe. The network has, done one on us this morning. Mr. Olatunde Amolegbe is the former Chartered Institute of Stockbrokers president. That's the show for today. Thank you all for joining us. Be the best you can be, and be the change that you want to see. I am Nancy Naji. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Follow all our other social media platforms, where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.